they get constructive on the stock, as a result of which they have a reduced rating with a target price of 1500 on the counter.
Okay, thanks a lot for that. I think we just have about 20 seconds, 15-20 seconds left before the markets open for the day. It's not so bad, to be honest. The Nifty is indicating a fall, but it's not like a collapse or anything, about an 80-point fall. Not as bad as what the global market cues are for us. We've had a steep sell-off from across the world, especially in the Dow Jones, which has now erased all of its gains of 2023. The US 10-year yield is at a multi-year high. You have large-scale FI selling. Given all of that's thrown at the market, the Nifty is still resilient around that 19,500 mark. Let's see. Maybe it's too soon to tell, but for now at least looks like the losses are restricted around that 19,440 odd level. A couple of stocks, of course, that are batting for the bulls this morning. There's Nestle, which is up about 2%. There's Bajaj Finance, up about 0.7%, and a couple of auto stocks. So there you have it. The first take on the index. It is getting ugly now. About 100 points gone on the Nifty at 19,400, just holding on by the skin of its teeth. The Sensex is down about 400 points, so not a great start for the market. The Bank Nifty is down 330 points, and the advanced decline ratio is well in favor of declines, actually, over 1,100 stocks. Let's keep it with the losers, just to give you a sense of what's happening. The cement stocks are dragging their feet, in fact, dragging the index. Ultratech Cement, Grasim, down anywhere between 1 to about 3% odd. And steel stocks, Tata Steel, Hindalco coming off. Auto stocks, Maruti, Tata Motors are in the red. Bajaj Finserv has some news flow going for itself, so that one is also down about 0.3%. And then you have other heavyweights like Infosys, HCL Tech, SBI, Kotak Mahindra Bank, ICICI Bank, L&T. So it's really a secular move on the downside. On the upside, Bajaj Finance holding up just barely, up about 0.3%, pivoting around that 88,000 rupee mark on the stock price. And Nestle India is up about 2.5%, batting for the bulls there. BPCL is also holding up a tad bit, but otherwise, it's actually a market that's quite weak. It's opened up well in the red. The mid-cap index is down about 250 odd points. There's a steep sell-off across a lot of these, recent favorites, whether it's something like a Zomato, Ujjivan Small Finance Bank. So I guess a lot of profit-taking happening today.
Well, that's right, Sonia. A few stocks are doing well, though. JSW Infra had a good listing yesterday. It's building onto that. That's up close to around 4.5% as we speak. Suzlon had a good close to trade. Well, that one as well has opened up well in the green. So that's up close to 2.5%. And volumes are very, very high on a couple of these names. A smaller name like a GVK Power, well, that's up close to around 5%, but that's only a 13 rupee stock as of now. In terms of frontline F&O names, very, very few stocks are trading in the green, but Nestle is one stock that's opened up. Strides yesterday was a little bit weak. That's pulled back today. And from the cement pack, you have Ramco Cement that's up close to around 0.5% odd. MGL, it had a good run yesterday. It's building onto that. That's up close to around 1% in today's trading session. The problem for the markets is now we're trading closer to around 19,400. Last few days, we've been going to around 19,470, 19,480 and bouncing from there. As I said earlier today as well, the Nifty Bank is a crucial component. It's opened up weaker than the Nifty. It's down 0.8%. It has the weekly expiry that plays out today. And ahead of the RBI meet as well, you'll want to defend this band of around 43,800 to around 44,000. That's going to be the index to watch, and that can swing it either which ways. For the time being, the bears are feeling on top. Prashant, for us.
Well, almost from being slightly above 19,500, we are only 5 points above the 19,400 level. The lower end of the Bollinger Band, the daily Bollinger Bands is around the 19,360, 70-ish levels, which we put out in the morning. So you're basically there. Now we need to see if those kind of hold or not. You got pressure, clearly. Market breadth is 2:1 in the negative. So almost 1,200 stocks are lower and about 650 stocks are higher. That's what's coming through. I'll start with what's down with volumes. IDFC First is down 2%. That is coming up with some volumes. Ujjivan Small Finance Bank had a decent up day yesterday. That is pulling back about 1. Maruti is down 2% on the back of large volumes. And there is Zomato, which I think made a new 52-week high. That's down about 2% this morning. Jubilant Food is another one, which is down about 1% or so, 534 on Jubilant Food. The Bajaj twins, both Finance and Finserv, did well. They were the top Nifty gainers yesterday. They're down about 1.33% to 1.5%. Max Healthcare was up 4% yesterday. That is down about 2.5%. These are basically, small reversal moves off of what happened the previous day or the prior week. nothing more. M&M Finance is down about 2.5%. There was that pre-quarterly update. SAIL, NTPC are some of the other names which are coming up on the downside. I mean, another one of these reversals, like Metro Brands was up 10% out of the blue yesterday. That is starting 4% lower. So a little bit of pullback on some of these names. On the other side is what we are seeing. On the way up, JSW Infra, the listing from yesterday, that is the top volume-led gainer. I think ended 30% higher. It's up another 4% this morning. So 163, 164. And with this pop, the gap with Adani Ports, which is the number one player, JSW Infra, in terms of capacity on the commercial port sector, is number two. The valuation gap is narrowed quite a bit. Of course, Adani is far larger, but the valuation gap is narrowing. Nestle is up 4%. I think Nigel mentioned that. Bank of Maharashtra is up 2.6%. Good numbers. Suzlon is up about 2.5%. Stocks back almost at 28 rupees now, Suzlon. So that is pushing higher. And there is something like a Titagarh Wagons, which is coming up with some gains as well this morning. Dhanalakshmi Bank had a big day on the upside yesterday. It's following through with a 4% gain this morning as well. So, that's essentially what's showing up on both sides of the market right now. 130 points lower is what we have at about 19,400. Anand Shah is with us, head of PMS and AIF investments at ICICI Pru Asset Management. Anand, good to have you with us here. Thank you very much for your time. We had Naren with us a week and a half back, and his view was kind of clear that maybe this is the year for large caps now. I mean, the remainder of the year, at least. Is that how you look at things as well, Anand? I mean, what is your own view, near to medium term, with all that is going on? And there is a lot going on. Go on.
Hi, very good morning. Yeah, indeed. And this year is going to be more bottom-up than top-down. Obviously, it's a tug of war between relatively stronger fundamentals in India versus what's happening globally. You're watching, especially US, the 10-year has moved up significantly last 1 month. China is obviously crawling back from slowdown, and to that extent, there's a slow but a steady recovery out there. But otherwise, you don't have great news coming out from global markets. On the contrary, India relatively looks a little stronger. Obviously, a lot of things going for India, and to that extent, this year belongs to bottom up. And when you sort of scan the market, obviously we find a lot of value in large caps relative to the mid and small caps. So that's true. Nevertheless, when you do a more of a segmental and more of a sector-wise analysis, we will have winners within the mid-cap and small-cap. So we've been more bottom-up, and that is the way forward, at least.
Okay, been more bottom-up. Got that. Anand, hi, good morning. In terms of sectors, how are you positioned in the NBFC space? We had some pretty decent numbers that came in from Bajaj Finance, but these are stocks that are, already at 52-week highs. Do you see more valuation and growth upside here?
No, within the financial services space, we actually prefer banks over NBFCs. Given, you have to also appreciate that banks actually had a very tough time between 2015 and almost all the way up to 2020, 2021. And in that period, obviously, there was a significant derating in banks and re-rating in NBFCs. Also, to that extent, relatively, the competition coming in from banks within the overall market was weaker as they were grappling with NPAs and recovering and fixing their own balance sheets. I think going forward, while there would be winners within NBFCs also, but our take is that the bank is better placed, both in terms of growth, in terms of competitiveness, as well as in terms of relative valuations. I think we would at least we prefer banks over the NBFCs at this point.
Okay, all right. Anand, just hold that thought. Jubilant Foodworks is a stock that you should be keeping on your radar because there could be an offer that's underway, but they've slashed the prices on large pizzas big time. And they've sent it to all their clients out there. So that could be a stock in focus on the large pizzas. On the veg side as well, it's down from around 799 rupees to around 499. On the non-veg pizzas, well, it's down from around 919 to 549. Could be ahead of the big event. That's the ICICI World Cup. That's going to be kickstarting later this week. So that could be one of the stocks that should be on your radar. Competitive intensity, I think, is going up. And I think as a snack, I think the demand as well for pizzas has been going down. I think burgers have been coming to the fore.
Some have said, and not all agree, and I remember posing this to, I think we had someone as an analyst, price points are lower, right?
Yeah.
For burgers. So maybe it is in a high inflationary environment, down trading. I mean, of course, there is, of course, intense competition in the pizza space as well, but maybe a little bit of down trading from high price pizzas to slightly more affordable burgers. That's one explanation. But of course, this is in the realm of theory. We'll have to talk to companies to figure out why this is happening.
I'm just feeling really hungry looking at that offer. I mean, the non-veg pizzas has all the sort of salami on toppings.
Go
the
ahead,
veg
Sonia.
pizzas.
I mean, right on cue. Make the order.
World Cup or no World Cup, right? I mean, getting hungrier. But I mean, that's actually a good question that we can even pose to our guest about what the the way forward could be in this entire QSR space, right? Anand, how are you feeling about it? We are entering into this big event, which is the World Cup. All the QSR companies, even the platform companies for that matter, Zomato is picked up in a big way. But there is a lot of competitive intensity within segments. How are you approaching it as an investor?
No, indeed. So obviously, any segment that has a growth obviously is a good opportunity for equity investors, but it also always attracts competition. And what has changed in the QSR space, and especially within QSR in the home delivery space, is what Zomato and Swiggy would have done is it's now all pervasive in the sense you can get delivered anything and everything, and it's not only pizza that used to be a decade back. So I think to that extent, competitive intensity in general has increased, and rightly so, given globally food is the biggest industry and it would attract that sort of entrepreneurs and the capital. So that's happening in India for sure. But even within the delivery space also, it's actually a couple of notches up in terms of competitive intensity. So it's a tough business and a very difficult one indeed to crack and continue to maintain leadership, because obviously there is always change in the taste, and to that extent the customer loyalty, if you would have observed yourself or any one of us, we don't have a great loyalty for the same food as we keep on trying new stuff. It's a tough business.
Okay, all right. Anand, since we're talking about the World Cup, a couple of sectors could be in focus. Case in point being the hotels or the aviation space as well. And some of the stocks have already seen a big run. Now, Q3 is going to be seasonally strong. And also you have the World Cup. Do you think some of these themes have already played out? Or do you think the best is yet to come for them?
I think this is something I was discussing even, that these are the certain sectors which have actually had a very, very painful long periods of time, like telecom, like airline, or for that matter, even hotel. And to that extent, we have seen a significant consolidation in this industry, in the sense that the new hotels are not being built, not many new aircrafts are coming through because of the OEM issues, but even we have seen consolidation both in telecom and in aviation. To that extent, I think notwithstanding World Cup, I think, and our philosophy is one of the key ingredient when we look for in our stock picking is consolidation of industry. I think aviation, hotels, and even telecom, they all fit through in terms of increased pricing power for the manufacturers/service providers, and less of the pricing power for customers like you and me. And to that extent, we would be in years to come paying more for these services than less.
Okay. Anand, we'll leave it there. Thank you very much for joining us. It's a pleasure having you with us here on CNBC TV18. Well, we're down 130 points. 19,370 is where we are at. I just want to take a quick sort of stock of what's happening in the market because, yeah, I mean, it's down and out, and a full 2:1 declines to advances ratio is what we have, with what 15 minutes of trade behind us at this point in time. You know, on the downside, Axis Bank is coming up right on top with large volumes. It was not there when we looked at it right at market open, 2% lower, and it's top-traded stock now in terms of volumes. Maruti, Zomato, IDFC First, etc. I mean, they're all right there. M&M Finance has picked up a little bit more on the downside. It's down 4% now, almost 4%. And there is Mahindra and Mahindra, which is down about 1.6, 1.7% as well. IDFC Limited is another one, which is down about 2.75%. I think some of the others, of course, we've been talking about, like Metro Brands. These are essentially reversals after very sharp moves that we saw yesterday. Lodha is down 2, stocks at about 772. Shriram Finance stocks done very well. One of the largest, commercial vehicle financiers, down 2%. JSW Energy is coming up with a bit of a cut. Quick Heal has done very well over the last 1 week or so. That is seeing some reversal of about 2.25% or so. So yeah, I mean, buzzing kind of screen, but on the wrong side, the wrong color.
That's the important part, right? I mean, the Nifty really is cracking hard now. So it's 135 points gone. The Nifty has given up on 19,400. The Bank Nifty is the one that's really taking it on the chin. So 400 points gone over there. We, of course, I think preempted this given the weak cues that we had, but somewhere the bulls were also, taking hope in the fact that we were resilient so far with everything thrown at us, the kitchen sink thrown at the market, but we were resilient around 19,500, but that is given up now. Bank of Maharashtra is definitely the stock of the moment because of that big move, not only in terms of price action, but volume action as well. And a very strong, business update from Bank of Maharashtra. Over a 22% growth in deposits, CASA growth is over 10%, and advances have also grown about 23%. So there are some outliers, but otherwise the market is in a pretty bad shape.
Yeah, and the other one is IOB, the very limited float in the market, but that stock is 50 rupees now. And the volumes are rather high on that stock as well. I think only around 2.5% of float in the market, but the street seems to be bidding that one up, so that as well is higher. IOB, Bank of Maharashtra, Dhanlaxmi Bank, all of them moving higher. And IFCI, I think in the last 1 month or so, that stock has moved big time. Remember, 10 years or so ago, that was a stock that there was a lot of interest in. But, that one, today it's up 2.5%, one of the highest volume traded stocks. And the last 1 month or so, I think that one as well should be, it's up more than 50% just in the last 1 month. And Suzlon, that's a theme that the street is latching onto. Yesterday as well, it was frozen in upper circuit. And today as well, the stock has opened up with a gain of around 2.5% street. After they did that fundraise, they seem to be a little bit more confident with regard to the prospects out there.
Okay. By the way, HDFC Bank is revamping some parts of its top management 3 months after its mega merger with HDFC. That was, of course, the big talking point in the last many days and the reason for the HDFC Bank underperformance. Well, this according to sources who say that the bank detailed the changes in a memo to employees late on Sunday. Ritu, my colleague, is tracking that story closely. Ritu, over to you.
A major top management rejig, but an expected one at that, after HDFC's merger with HDFC Bank, with the bank CEO Shashidhar Jagdishan saying these changes were made to bring in a sharp focus to leverage what the bank has built as the runway for growth is large. Now, one of the biggest change comes in the form of a dedicated head for the mortgage business, which now forms almost 35% of the loans after the merger. The former head of retail assets, Arvind Kapil, is going to be spearheading it. Arvind Vora, who was previously looking at retail branch banking, will now head retail assets. Second, HDFC Bank veteran Ashish Parthasarathy is going to take on the responsibility for retail branch banking in addition to treasury. But importantly, the retail branch banking business itself has been split into two according to various regions and will be driven by Smita Bhagat and Sampath Kumar, who will report into Parthasarathy. This is important because while HDFC Bank already has about 8,000 odd branches, it is looking to add 2,000 more every subsequent year. Now, third, in what is a clear step towards a bigger digital push, HDFC Bank's entire IT and digital function is going to be consolidated, report directly into the CEO. Ashima Bhatt has been tasked with creating a bank within a bank, which will essentially serve as a virtual relationship channel to service customers who may not necessarily need a physical touch point and help the bank meet its objective of creating a new HDFC Bank every 4 to 5 years. A new Chief Digital Experience Officer post has been created, a dedicated head for creating banking as a service, and all consumer-facing customer-facing digital products are now going to be run as direct-to-consumer digital businesses with their own separate P&L. There are other changes as well, but overall this means a sharper focus on retail and a bigger role for all things digital at HDFC Bank.
Okay, well, I think a lot of interest around that one name, HDFC Bank, and what that means. I mean, it's been a huge underperformer, and perhaps there is valuations, of course, as compared to the last 10-year, 15-year mean on a price-to-book basis are also lower. So it's been it's cheaper, the cheapest in a while, actually. The market, look at that, about 150 points down now. So it's not as if we've seen a turn or anything. We started down, and instead of a bit of a bounce, it's actually falling more. So 19,377 on the index. So we're actually at the levels that we put out in the morning, which is the lower end of the Bollinger Band. Straight off the bat, within the first 30 minutes of the market open, we are there. Just a quick look at what's happening, in the region as well. Of course, the Chinese markets are shut, but other markets in Asia and what they're doing. So Hong Kong, for example, had been under pressure. It's actually the market which has done the worst over the last couple of weeks. Taiwan is on your screen, down about 1.25%, and the Nikkei, etc. With what's happening with the Japanese yen, I think there is a bit of a bounce which is coming through. But otherwise, the dollar against the yen has been rising. I think it broke the 150 odd level, but there is some pullback which seems to be going through. There you go, 149.27 or so. So this is a bit of a global issue that one is facing at this point in time. There are, we were talking about HDFC Bank. There is a second quarter update as well, which is flashing at the bottom of the screen. This is coming through. We'll have more on this one with Abhishek. Advances for the first quarter, we'll have to, of course, look at this. And I'm not sure if these numbers are comparable, but advances are up 60% for the first quarter and 44%, on a quarter-on-quarter basis. I don't think these will be comparable. And we'll have more details coming through for the HDFC Bank second quarter update, the pre-quarterly update, which many of these companies are putting through. On the broader market, I mean, what else is going on? I mean, I think we're right there. So nothing incrementally, maybe a few more names. Tata Power is down about 2% or so. There is L&T Finance, which is down about 2 3/4. Idea is coming up with about a 2% cut. And Manappuram is another one which is coming up with about a 2.25% sell-off at this point in time. So this is a different day as compared to what we've seen over the last many sessions, where it's not looked bad. It's not looked this bad. And generally, the markets kind of scrape through, even when we've woken up to 1.5% cuts from overnight. This seems to be a little more.
I just want to mention M&M Finance, if we can pull up that stock. Despite a strong dispersal growth this time, the stock is actually down 4%. So maybe the market is in general in a mood of profit taking. Look at M&M Finance now 5% lower. In fact, Abhishek is joining in. He's been tracking all of these closely. Abhishek, first on Bank of Maharashtra, which has of course done very well, and the stock is also bucking the trend today. Go ahead.
Well, Bank of Maharashtra, in terms of the business momentum, it's been an absolutely brilliant quarter for them. So take a look at the deposit. It's grown by 22% YOY and a decline of 2% sequentially. CASA is up 10% YOY and a decline of 2.6% quarter on quarter. Despite that, the CASA ratio is perhaps one of the best in the industry at 50.7% when compared to close to 51% in the previous quarter and about 56.3% on a YOY basis. In terms of loan growth momentum, that's pretty robust at 23.5% YOY and about 4.2% quarter on quarter. So there is a sharp jump in the CD ratio, that is a credit to deposit ratio, which is up to 76.5% when compared to 71.9% in the previous quarter, indicating that net interest margin could be on the healthier side in Q2 when compared to Q1. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. By the way, it's not stopping actually. At least the first few minutes, the bears are going to be feeling very, very good. The markets have gone deep. The Nifty Bank is just holding on to that 44,000 odd mark. And a few stocks, that are moving low. You have NTPC, that's been a big outperformer. That's seeing some selling as we speak. ICICI Bank, that's the lowest we've seen in the last 3 months or so. Axis Bank has moved lower. Maruti Suzuki for the second day running, that's down close to around 2% approximately. HDFC Bank, well, it's reacting to that quarter 2 update. I don't know whether that one has corrected enough, and today it wants to bat for the bulls, but the bulls will be counting on that because at least from the lows of the day, the stock has seen a big recovery. Advances up close to around 57% on a year-on-year basis. On a sequential basis, it's up close to around 44% odd. So we'll get you a deeper detail into this in this. But for the time being at least, the stock has recovered a goodish bit from the low point of the day. So further analysis on that, and that could be a key stock to track given that it's a Nifty Bank expiry. But let's move on. Then we have BLS International. Remember, 2% equity changed hands at an average price of around 250 rupees. Shikhar Agarwal, the joint MD at the company, joins us on the show. Hi, Shikhar. Good morning. Thanks so much for speaking to us here on CNBC-TV18. Well, we saw that large trade yesterday, but we're not sure who were the parties to it. Do you have any details?
Holding is considered. We are fully intact, so we don't have any idea. I also saw after in the market there was some good volume that happened yesterday, but maybe existing investors must have changed hands.
Okay, all right. So no big clarity, but you're not part of that deal. Great. Let's focus on the other big issue, the Canada visa services. Is it functioning or is it not? What is the latest update on that front?
No, see, as per our operations in Canada, where we work for the Indian Embassy and the US Embassy, we had already announced that the Indian visas had been suspended because of operational reasons, as per instruction received. Now, the impact of this on our overall revenue is less than 2%. Since we are also providing a lot of other services like consular services like passport renewal, OCI, and different kind of application processing for the diaspora abroad.
Okay. Shikhar, just want to get back to the earlier conversation. I want to understand the promoters recently sold some stake. It still stands at a little over 71%, but any intention that the promoters have to sell more stake in future, and where are they comfortable keeping this overall stake at?
No, we have no intention to sell any stake in the company. This was, I think, we already discussed this a couple of months back, that we had reduced the shareholding to 71%, and that was it. And we have no intention of reducing any shareholding further.
Okay, no intention of reducing your shareholding further in the company. So you'll keep it at this 71% plus level. Got that. On the Canadian visa, just trying to understand what will the exact impact be? I mean, you said that it's going to be 2% of your business contribution from this development, but can you explain how you have arrived at this 2%? What are the volumes exactly that you service? What is the kind of margin impact that we are looking at?
So there will be no margin impact. As you have seen in the last quarter, we have achieved an EBITDA margin of 20%. 85 crores. And, there has been a growth of 150% in EBITDA level. We've done 80 crores of EBITDA. So, we expect to, continue that momentum. Because of this suspension, for us, we are working in 64 countries, working with more than 40 governments. So it does not really impact our numbers.
Okay, Shikhar, but you'll be having staff out there, right? So the revenue stops, but there'll be some operating expenses. How does it work?
No, see, we are definitely seeing a surge in applications and renewal of passports and different kind of applications. As I've said, there was a negligible number of physical visas that were being issued, by us, so it was an impact of only 2% on our overall revenues. So we don't see any impact because of this development on our revenues.
Okay. Can you tell us what is the utilization of the cash that you have on your books? What is the utilization plans? I think you have over 640 crores of cash. Any M&A plans that you have? Anything else that you'll be utilizing this money for?
Definitely. As you know, last year also we did a major acquisition, 150 crore odd company that we acquired called Zero Mass. Where we have Incorp now, there's a step-down subsidiary called BLS E-Services. All our e-governance and bank correspondent business incorporated into that. At the same time, we are looking at acquisition of sourcing space also globally. So definitely there will be a cash utilization in acquisition opportunities and the new contracts that we are looking at, in deployment of those, for centers across the world.
Okay, Shikhar, good speaking with you. Thank you very much for joining us, and thank you for taking out the time and being with us here. So that's the management of BLS. Well, now, on to a story that we reported yesterday. Sources say that the government's Expenditure Finance Committee has approved home loan subsidy scheme. It is expected to be part of the PMAY scheme, and the size will be about 60,000 crore rupees over a 5-year period. Mr. Dinesh Kumar Khara is chairman of the country's largest bank, State Bank of India. He's joining us on the phone line to talk to us about what this could mean. Mr. Khara, it's a great pleasure to welcome you as always here on CNBC-TV18, sir. Thank you, Prashant here. Could your first thoughts, sir, on this particular development, and what would this mean in giving a thrust to the home loan segment, the housing finance segment?
Thank you very much for having me on your channel. And when it comes to this particular scheme and the broad contours which I've read today in the newspaper, it gives you an impression that it will certainly be a very positive in terms of increasing the demand for home loans and also for the homes in general. Because what we had observed that the earlier scheme had a lower cap, and also on account of the cost escalation, many of the borrowers were not eligible to avail the benefit in this scheme. My sense is that it will be a very major positive boost for pushing the home demand.
Mr. Khara, I mean, you have the best bird's eye view of how the previous efforts have panned out. You said there were some hindrances, lower cap, etc. Could you tell us the experience of the the scheme as it was being implemented so far? What was the size, the quantum?
Implemented very well.
Yeah.
No, so far it has been implemented very well. The PMAY Urban scheme is very well implemented. The only thing is that over the period of time, the cost goes up, so which actually means that some people who would have been otherwise eligible, but on account of the increased cost, they were not eligible. So in this particular effort, even those people will also be covered. So that is what my understanding is.
So this limit of 50 lakhs was lower earlier.
Yeah.
So this now raises that cap.
It was actually lower. It was lower. So now that has been increased.
Okay. And any sense on how this could boost demand? I mean, by how much? Is there a broad sense how to look at the number? 60,000 crores over a period of 5 years is what we have.
I expect that broad number. It is actually back of the envelope calculation. Another maybe about 50 lakhs plus home loans could be granted, 50 lakh plus. So it was already about 1 crore plus, which was there in the PMAY Urban. So I think this will add to at least another 50 to 60 lakh more home loans.
50 to 60 lakh home loans over a period of these 5 years, sir?
Yeah.
Okay.
The current scheme had covered about 1.2, I think about 12 million. That is the number which I have rough estimation. So almost 50% of that can be added in this particular scheme.
That seems to be a very meaningful addition, sir.
Yes, absolutely.
And what would these would be generally, I mean, in your assessment, closer to that 50 lakh number, sir, in terms of size, or would it be lower in terms of the size of the loan?
It would be somewhere around it is just back of the envelope calculation. Maybe we'll have to look into it in more closer terms once we have the contours of the scheme. But broad assessment is somewhere around like that. Just under 50 odd lakhs is broad assessment. Yeah, that's right.
Okay. What is SBI's share, sir, of the sort of annual home loan market?
We have our market share would be somewhere around 30% or so.
Okay, so you're the largest player in the space.
Yes, you're right. We are at about 6.7 trillion.
Okay, 6.7 lakh crores. Got it, sir. Sir, since I have you on the line, if you could just answer a few more questions. What's your assessment of rates in the system, sir? Because the big story, the big talking point has been US interest rates pushing higher to unprecedented levels, and that pulling rates around the world higher. I mean, here in India as well, we've been impacted to a lesser degree, but we have been impacted. What is your own assessment, sir? What this will mean for financial entities, banks in particular?
As far as Indian banks are concerned, we have got our liability mix essentially coming from the domestic market. And domestic market is to a greater extent quite insulated from the global financial markets as far as the banks are concerned. So I think to that extent, I think we'll have to probably wait and watch for having a very clear trend. As of now, we don't see much of a challenge. Whatever we are observing cannot perhaps be termed as a trend line.
In the first quarter, most banks and financial entities saw some compression in net interest margins. Would you expect some of that in the second quarter as well?
I think we'll have to wait and watch. I will not be in a position to comment right now on this.
Okay. So we are also talking to you in the week of the RBI policy. Any expectations?
We expect it to be paused.
Okay, a pause. All right, fair enough. Mr. Khara, it's a pleasure, sir. Thank you very much for speaking with us here. I know you've got a busy schedule, but thank you very much for taking the phone call and explaining the impact of the home loan interest rate subvention scheme, which, as we reported, perhaps is going to be rolled out. No firm timeline yet, but it's a large one. And Mr. Khara said there were about 1 crore loans which were dispersed under the previous PMAY scheme, and he expects about 50 to 60 lakhs 50 lakh home loans under the new one. So this is, of course, over a period of 5 years. So pretty meaningful bump for, of course, large banks, etc., but even for home finance companies, which are much smaller, which would also mean that the needle moves in a much larger way for the smaller companies and not for larger entities like SBI, which basically are giants in the system. 30% market share in the home loan segment, as Mr. Khara pointed out. Just a quick look at the market before we go any further. I think
bounced off a little bit.
A little bit of a bounce, so that is good to see. From being down 150, 160, I think there is a 40-odd point bounce, Nigel.
Yeah, there are few stocks. The heavyweights are putting their hand in there, and they're putting their hand up to get counted. One is HDFC Bank. Post that quarterly update, it's bounced close to 100% from the day's low. The other stock is HUL. Pull up the intraday chart out there. That stock as well is batting for the bulls as we speak. And ITC, post the long-awaited announcement with regard to their hotel business, the stock has seen a correction from around that 495 odd. It went down to around 435 odd. Now that stock is seeing some bit of traction just in today's trading session, pulling back from the day's low, and Titan for the second day running. That stock as well moves to the high point of the day. So select stocks, they're trying to put in a bit of a fight. We're still hovering around 19,400. The day's low is around 19,380.
Absolutely. It's quite a resilient piece, right? I mean, despite all the bad news thrown at it, the market is holding on to 19,400. And the space to be in, is FMCG. I mean, not just ITC. You have HUL, which is holding up quite well. Nestle is in the green. Avenue Supermarts is now up over 2% And Nestle, of course, there's that board meeting as well where stock split will be discussed. The board meeting is on the 19th of October. So in the run-up to that, the stock is up about 2%. So the entire piece, this FMCG piece, is looking pretty good. Let's do one thing. Let's take a quick commercial break. On that note, on the other side of the break, Jose Perez of the S&P Global Ratings will join in to talk about what they've made of the inclusion of the Indian bonds in the JP Morgan Emerging Market Index. Do stay tuned in for that.
Welcome back. You got the market bouncing up a little bit, so that's good to see. We are back above 19,400, as we pointed out. Now, Jose Perez Gorope, head of research and emerging markets at S&P Global Ratings, is joining us now to talk to us about the impact of the Indian government bond yields being included in global benchmarks. For starters, the JP Morgan bond index. Thanks very much, Mr. Perez, for joining us. Good morning. I hope I got your name right. Please correct me. Feel free to correct me if I did not. And thank you. I know it's a early hour for you, but it's a big one, right, for India, for any country, for GSECs to be included, government securities to be included in a global bond index. And I think it's coming to the fore in a very large way because of what we are seeing globally, which is that interest rates in the US are rising to unprecedented levels. And the hope here is, because of this announcement, there will be a little bit of pre-positioning which will happen from foreign investors into government securities, and it'll keep yields at lower, manageable kind of levels. I just wanted your first sense on the impact that this will have starting now.
Yeah, thank you very much for the invite, and greeting to your audience today. Good morning. So it is positive. Let me just summarize by saying that it's a relevant step. Usually, when a country gets included into these indexes, there's a boost in the inflow of foreign investors into domestic government bonds. This is because foreign other investors will be tracking these indexes and entering and including in their positions Indian bonds. Now, that being said, I think we believe that the impact will be gradual, and that it's very hard to estimate at this point the magnitude of the complete effect of the inclusion in this particular index.
I just wanted your own assessment of what happens to sort of cost of capital. Both. I mean, let's just talk about sort of cost of capital on the debt side. There is perhaps going to be an impact on cost of equity as well. But your experience from other countries when this has happened, does it structurally reduce, cost of funding, cost of debt in the system for corporates?
Well, in the particular case of India, the current participation of foreign investors into government notes is very small. It's 1%. So we do believe that there's a large, road to go in terms of how much foreign participation can grow into India's public sector. Now, right now, India's public sector, including the central government, has funded projects primarily from domestic markets, and this has caused some sort of crowding effect provision to the private sector. And the private sector has therefore capitalized on equity markets and using other alternatives. If the entrance into this index and there's, there will be additional participation from foreign investors, and this frees up domestic capital to be invested elsewhere, it could potentially boost the domestic corporate bond market, and this might have a positive effect into return, into the capital cost for corporates. Now, there's no automatic guarantee that domestic savers will choose to buy corporate bonds, and they might as well also place some extra available funds into equities or bank deposits or increase consumer spending. Which funds they buy and the degree of risk premium they seek when they switching from government bonds is still to be determined. So in summary, we expect a process of domestic corporate market development to be positive, but gradual and not necessarily on a smooth sequential basis.
So if the foreign participation in Indian bonds goes up on the back of many of these inclusions, right? There are a couple of more inclusions that are expected from the likes of Bloomberg, etc. If the foreign participation does go up, how much can it go up to in both percentage terms as well as in value? What are we looking at over the next 1 to 2 years?
It's hard to say. I mean, when you look at the other peers in global markets, it also depends on how the government manages the whole inflows, right? So it's hard to say. What we've seen in other emerging markets is that this participation could go up from 20 to 30%. But, at this point, we wouldn't set this threshold for India. In our own report, we did make a projection that if it gets to 10%, it will be relevant for corporates in terms of the potential free allocated resources that the corporates might get access to in the future.
So as a percentage, what is your forecast in terms of how much the funds for corporate debt could rise to relative to nominal GDP over the next, say, 5 to 10 years?
It will depend. And once again, there's no guarantee that those funds that have been liberated in the market will go straight to corporations, right? We did make an assessment, or you know, it's not a forecast. It's an estimate that if it goes to 10%, it could triple by 2030, and that's in an article. However, it's not guaranteed. I mean, many things need to happen over the next couple of years for that to actually materialize.
Got it. By the way, Mr. Perez, as we are speaking with you, there is news coming through on wires that the Bloomberg Global Aggregate Index, the other bond index, they perhaps may also consider including government bonds in that index. And I believe that is the largest of the three. JP Morgan, there is of course the Bloomberg index, and then there's the FTSE. JP Morgan is the smallest in terms of AUM. Bloomberg is the largest. Would you expect others to follow and take JP Morgan's lead?
Yeah, that's a relevant possibility given India's relative position against the emerging markets. You know, right now there's a lot that the government has been doing in order to be included into these indexes, and also there's a lot that the government is doing in order to boost foreign investment in different productive sectors of the economy. For instance, it has provided some additional incentives for the sectors of electronics and information technology, and also into automobiles and other components. So, of course, if this is the case, and given the foreign interest for India as a country, it could be a possibility for India to be included in other indexes.
All right, we will leave it at that. Thanks a lot for joining in and speaking to CNBC-TV18. Appreciate your thoughts here. By the way, there's a new listing that is going to happen in, I think, just minutes from now, or I think it's already taken place. The Updater listing is what I'm talking about. Okay, there you have it. Updater is the new kid in town, down about 2% in opening. The company actually, I mean, in case you are not aware, the company provides cleaning, housekeeping, heating, ventilation and air conditioning equipment, largely for manufacturing companies. So their key clients are, the likes of Hyundai, Eicher Motors, Honda Motorcycle, etc., Saint Gobain, TTK Healthcare. So they provide all of these kind of servicing, electrical, plumbing. So that's basically business support services is what they're into, which is about 30% of their overall revenues. So the issue price was about 300 rupees. It's a slightly, weak listing over there, down about 2.5%. So let's see how it goes. But this is an offer for sale. The promoters will be selling about 120 crores and two private equity firms will be offloading about 120 crores as well. So that's Updater, the new kid in town. But let's get back to the market. It's not a great day to be listing as well because the market conditions are poor. The Nifty is down about 140 points and haven't seen any respite at all. Mitesh Thakkar is back with us. Mitesh, we've given up on this 19,400 mark with ease. What do you see as the move for the rest of the day?
Good morning again. There are a couple of observations. One, both the indices had a gap down and there's no attempt to fill the gap, which means that till yesterday's low are being captured, good chance that we'll see supply kind of pressure remain at higher levels. And the Bank Nifty very likely should head towards 43,450 and Nifty towards 19,230, 40 zone, which is where we had bottomed out in August. So I think at least that test looks very likely to be in the next 2 to 3 sessions. So maintaining a mildly negative view. I have one buy and one sell call right now. M&M Finance is breaking down, so that's a sell. Keep a stop at 294. Look for targets of 270 here. While on the buying side is Ramco Cement, which I would recommend buying with a stop at 920 for targets of 980.
Okay, all right. There is pressure. It's not as if, after that initial bounce, things have stabilized or anything. 19,300, just under 19,400 is where we are at. Mitesh, thanks very much. We'll keep coming back to you for more. Well, we'll take a quick commercial break here. Up next, Manisha will join in and put the focus on what's happening in the commodities space. So lots of action there. We are back with that in just a bit.
Well, let's get a quick grip on what's happening in the world of commodities today. Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking?
Thank you, Sonia. I'm looking at aluminum prices. You know, overnight, metals have had a hit. We saw 2.5 to 3.5% of a decline across metals. So whether it was copper, zinc, aluminum fell 1.5% as well. Tin prices fell 3%, and silver was down 3.5%. So metals have taken a hit, and aluminum is no separate from the sector there. We have been trading at a 5-month highs for the aluminum prices, but with the overnight decline, we've started October on a weaker note. For the month of September, we did see the aluminum prices gain up by 5% in a market when most of the metals actually closed the month on a negative note here. Well, we have seen decline in other metals, and that seems to be weighing onto aluminum as well. And then the hawkish Fed has lifted the US dollar index at a new 11-month highs. That seems to be weighing on across sector and asset classes also. For aluminum especially, it also is about China halting the expansion of production, and they have limited it to a current capacity of 45 million tons. So while last year China did produce an all-time high in sense of aluminum at around on the higher side at 40.2 million tons. That is what the markets are looking at, and we are looking at caps on production because of that. China actually seems to be importing cheaper aluminum from the markets there. The other point to note in case of aluminum is that Indonesia also has banned bauxite. Bauxite is a major ingredient in case of aluminum. So with China capping production, Indonesia banning bauxite exports is where aluminum clearly has been taking a lot of support from. If you look at the Shanghai inventories, well, we have seen those decline by 13% in the previous week. That was an added bullish point into the markets. And when you look at the aluminum production, that is actually very power intensive. So with the crude oil prices trading quite strongly in the positive, that seems to be supporting aluminum prices also. This is what we've done in sense of prices in this year until now. We started with a high of 2,660. We saw a decline up to 2,120 in the month of July. That was the time when most of the commodities actually saw a decline. Currently, we are trading at a 5-month highs of 2,300, but very down from where we started this year with. And the markets do believe that whatever highs that aluminum had to see perhaps have been done, the fourth quarter of this calendar year perhaps could be all about consolidation.
All right. Thanks a lot, Manisha, for that. All about consolidation. But let's do one thing. Let's take a quick break. On the other side, our special segment, It's the Economy. Lata will get chatting with Pranjal Bhandari of HSBC and Steve Englander of Standard Chartered Bank to discuss the surge in the US Treasury yields and its impact on emerging markets like India. Stay tuned.
Well, and it's the economy. We have to speak about the RBI monetary policy. Meeting starts today. And it's starting in a most challenging global context. The US 10-year yields have shot up by 20 basis points this week to a 16-year high of 4.84%. US yields are almost 1 percentage point above where they were when the Reserve Bank last met in August. So today we have two guests to answer two separate sets of questions. First, we have Stephen Englander, the head of currency and North America macros at Standard Chartered Bank, joining us all the way from the United States to speak about where US yields are headed. And then we'll have Pranjal Bhandari, the chief economist at HSBC India, to tell us how this can impact RBI's policy and its attitude to liquidity and rates. Pranjal and Steve, thank you very much. Pranjal, with your permission, may I start with Steve because I think it's midnight for him. Steve, first, US bond yields shocking us by surging nearly every day, now at 4.85. Where does it go? Does it go to 5, actually?
Well, 5 isn't our forecast, but, you have to respect the momentum that's in the market. And the fact that the bond yields are still reacting to incoming data and reacting quite forcefully. It looks, like the market wants to take a try at 5. And, what really matters is whether it can stay there and whether incoming economic data are strong enough to keep it there if it gets there. We think the U.S. economy is going to slow down, so we think that we're not going to stay at 5 if we get there, and we're not even going to stay at the current levels of around 485 on the 10. But it's very much data dependent. I think there are multiple forces that seem to be pushing up yields right now, including the momentum. And we need to see some sort of easing in the growth prospects, I think, for yields to come back down.
Yeah, every time we expect strong data, we actually getting even stronger data like the job openings. Well, what should we be prepared for in terms of dollar index now? At the moment, 107 and something.
Well, I think that the markets have not been very discriminating in terms of reacting to higher interest rates. It doesn't matter if it's inflation fears, growth fears, Fed fears, worries about deficits. As long as the yield goes up, the dollar goes up with it. So you have to think that at 105, if we got to 5%, that the dollar would go with it. By historical standards, the dollar is kind of very much in the range of responses. This isn't overly responsive. This doesn't seem to be modestly responsive. It's about average. But with yields going up this way, I think investors can't resist buying dollars.
Yeah, I take your point. Actually, the dollar went to 114 and 15 when yields were much lower. Now, coming to India, our inflation is actually peaking off. It's expected to fall from 6.8 in July to maybe 5.5 in August. Do you think emerging markets like India have the space to loosen monetary policy?
I think it's very hard. I think that as a generalization, and not speaking particularly about India, but I think as a generalization, emerging markets find it very hard to ease rates when U.S. rates are going up. I think India's growth prospects are fine. The macro picture looks fine, but it's still a difficult situation when dollar yields, which are viewed as being relatively risk-free, are so attractive, particularly when they're so attractive at the short end. So you're not even taking duration risk.
Okay. Well, just a word on growth. I understand mortgage rates in the US are already at 8%. And when the current floating home loan rates are reset, we understand there can be more pain. So while at the moment everyone's talking about a soft landing, can there be a very sharp downturn in 2024 in the US?
Well, let me put it this way. If you're under 40, you can't afford a house, you can't afford a car, you're paying a ton of money on your credit cards if you're borrowing, and you're paying back your student loans. You've just started doing it. It's not a very pretty picture. So you can't preclude the possibility that we have a sharp economic slowdown. We also know there are issues with regional banks. There'll be imbalances in duration of assets and liabilities. We know there's issues with commercial real estate. But the real caveat is right now there's no evidence that the impact is strong enough. It could happen, but we're not seeing it in the incoming data.
Okay, well, the RBI will have to grapple with that as well. Just a final word. Where does smart money go now? Will they pull away from EMs?
You know, I think that smart money and dumb money is going into short-term treasuries. They're just so attractive, both in nominal and risk-adjusted and real yield terms. I think it's hard to be, sort of investing in emerging markets. What could happen, I think, is that if it becomes clear that the U.S. is slowing down, and it doesn't have to fall off a cliff, it could just be a gentle slowdown, then I think selected high-yielding emerging markets will look very attractive. But in the current world, especially if you're afraid that U.S. yields are going to continue to go higher, it's tough to be excited about anything but the dollar.
Right. Okay, thank you very much, Steve. Deeply grateful that you have stayed up almost until midnight for us. Thank you so much for joining us. Pranjal, and thank you for your patience as well. Now you tell us, with this kind of a global backdrop, what really plays on the MPC's mind? Should we continue to expect tight liquidity kind of stance with two members pulling in favor of easing rates? What are you expecting the RBI to think in terms of rates?
Yeah, thank you, Lata. So, this looks a lot like 2022, high US yields, stronger dollar, high oil prices, but except that it's even worse because we also have this whole El Nino impact and the fact that many emerging markets have been raising rates over the last year. So growth is a little fragile. So, the set is not very good for emerging markets at all. So what happens to the RBI now? I think in the meetings that happen today and tomorrow, my sense is that there are two things they're going to be very focused on. One is the impact on external finances, the current account deficit, the BOP, and the other one is the entire inflation outturn, how all of this is going to react. Now, in terms of external finances, the current account deficit is widening. Oil prices are rising. We have this rice export ban. All of that is going to widen the current account deficit, which averaged about 0.6% of GDP last 2 quarters, but could widen all the way to 2.5% of GDP in the next 2 quarters. And the BOP could go into deficit, not just because of the trade balance worsening, but also because FDI inflows have been weak. We're seeing portfolio outflows from equity markets. So that keeps the rupee in a very fragile place. And my sense is at this point, the RBI will be most risk averse, will not want to take any sort of challenges or make any new changes. So in terms of what they do on Friday, my sense is no change in stance, no change in rates. They keep talking about the 4% target to double down on their inflation objectives and make sure people are aware about that they want to go all the way to 4%. Liquidity is something I think they will keep extremely tight. So far, they've been using very temporary measures like short duration VRRs or FX swaps. My sense is they could eventually move to even longer duration VRRs and FX swaps. And if need be, perhaps also get into more OMO sales and even a CRR hike. So I think everything is back in the table and the RBI will want to sound as hawkish as it can.
Oh, really? I mean, when we did the poll, we did get much of what you said. Ritu's poll said 100% no change in hike in stance. But you think even CRR hike is on the table?
Well, not exactly on Friday, but over the medium term, over the next couple of weeks or even months, if this kind of a situation endures. For now, I think it will, probably just double down on all these temporary liquidity measures. But if this is something that's going to continue, nothing is, out of the table. I think everything will have to be considered.
Okay. Just train our eyes to what we should watch or train our ears to what we should hear on Friday. What will you specifically watch out for?
Look, I would want to see if they make any changes to their inflation forecast. They're likely to unveil their March 2025 inflation forecast as well.
Yes.
I think that's going to be a very important print. If it's more than 5%, my sense is they're giving a strong signal that there are no rate cuts in the system for the next 1.5 years. But if it is lesser than 5%, my sense is that the signal they want to give is that look, things are bad now, but maybe in a couple of quarters things become better, and there may be some space for easing as well. So I think the inflation forecast will be very meaningful. The second thing I would look out for is their statements on liquidity. How far are they ready to go? Right now, it's mostly been using the temporary measures. But when will they get to permanent measures? How harsh could it be for the markets? Like, could there be a CRR high? Could there be a major OMO sales going forward? I think these are the two things I look out for.
Okay, what are the chances that they sound? I mean, we're all going to ask them that question. What's RBI's thinking on how India will be impacted by the high US yields? What are the chances that they say that we are largely insulated? Will that be a very dovish answer?
Well, they'll probably say that, and I think like they've done in the past, they'll say how the rupee has been relatively stable despite all the global changes. So I think they will say that, but in a way, my sense is that they have to say that to sort of ensure that people don't go into panic. But the truth is, I think they are on guard.
Okay, yeah, well, they ought to be. I don't know if you noticed in the last BOP numbers, remittances fell. I mean, historically, quarter after quarter, our remittances keep rising. But this time they fell. Quite clearly, some people out there are keeping it in US treasuries and not bringing it back. So they, I guess, would worry. Pranjal, a word on growth. I mean, those tax collection numbers were brilliant. Income tax collections rising 37%. Corporate tax not so much, perhaps 15%, but overall direct taxes 26%. Do you think somewhere growth is really strong? Even the first quarter numbers for advances and deposits by banks look very strong. Do you think there's an upside surprise to growth in India?
Well, you're right, Lata. Growth is extremely strong across all the different indicators we track. I don't want to read in too much into the tax data because for the last 2 months, it had been weak. So maybe there's some sort of a payoff, or there's some sort of refund cycle that's going on. So I won't read too much into any one data print. But if you look across all the data prints, growth is extremely strong. I think this one difference that I'm seeing is that rural is weaker, much weaker than before. But because urban just continues to be so strong, it's more than offsetting the weakness that we are seeing in rural growth, at least for now. I want to bring your attention to the labor force data in urban India. If you look at the CMI data, if you look at the number of people employed, they are way higher than what we saw in the pre-pandemic period. So things are very good, in urban India as of now. And I think that's what's keeping growth strong right now. Of course, with oil prices rising, some of that could get blunted going forward. But so far, growth extremely strong.
So you won't be surprised if RBI says puts an upward number to the 6.5% forecast. It could even be 6.6, you think? Possible?
Well, not really. I think at this point, there's some sort of a consensus between policymakers, both in the government and the RBI, on this 6.5% number. So I think they're quite comfortable there. In fact, my sense is they won't change either their growth or their inflation numbers on Friday. Okay.
All right. Thank you very much, Pranjal, for training our eyes or telling us what we should be watching out for. What Pranjal is referring to is that there will be a monetary policy report that comes along. In September and April, there is an additional MPR, which gives RBI's view of the inflation and growth forecast for FY25, 1 year ahead. And that's what she's saying. If that FY25 March, the inflation number is 5, then the Reserve Bank is telling you to be careful. If it is ready to bring it down towards 4.5 or thereabouts, then the Reserve Bank is saying that there is some hope of cuts maybe next year. So that would be an important number to watch out for. And whatever they do and say on liquidity will be very important, of course. 10 a.m. Friday is when we will know it all. Thank you very much for watching this special edition of It's the Economy. Wrap up on Bazaar. Chartbusters up next.
The Indian market opens capped down on weakness in global equity markets. US bond yields hit a 16-year high. Stronger than expected labor data also raises fears of further hikes by the US Fed. Nifty trades around 19,400. Mid-caps underperform.
Titagarh Wagons wins an 850 crore rupee order from the Gujarat Metro Corporation. The stock is up close to 2.5%.
Avenue Supermarts is the other one which is gaining in today's trading session. A strong second quarter business update where the revenue grew over 18% year-on-year to 12,300 crore rupees.
In a confirmed news break, IDFC First Bank launches a 3,000 crore rupee QIP priced at around 90 rupees 25 paise a share. A 4% discount to yesterday's close price. Hence, the stock is down 2.5%.
Morgan Stanley issues an equal weight rating on M&M Finance, citing substantial rise in slippages with deficient rainfall a likely factor. The stock down 4%.
Hello and welcome to Chartbusters. I'm Nigel D'Souza, and joining me today, as always, is Mangalam Malu. Well, Mangalam, the markets are under pressure, but in the last 10 minutes or so, the markets have bounced up close to around 40 points from the low point of the day. So important to see whether or not we can sustain this bounce. But otherwise, it's been a good bounce. And the bulls will want to end closer to around 19,450.
It will be a good bounce if the bulls do go ahead and cross that 19,450 mark, Nigel. The bounce has been led by HDFC Bank, which has moved to the high point of trade. They reported their update as well. The internals don't look bad if you take into consideration the merged entity. And as a result of which, the Nifty Bank has conquered or gone mildly past that 44,000 mark, an important mark to watch out for. And the Nifty has been recovering as well. But what I'm actually looking at, Nigel, are the pizzas. Yeah. Why am I doing that? Because, Domino's has announced offers ahead of the World Cup. And if you have the Domino's app on your phone, you'll get a lot of messages from them telling you that, okay, the World Cup is here and here's where you have to, go ahead and buy pizzas, etc. They've slashed prices of both veg as well as non-veg pizzas. So equal opportunity for both eaters.